20 million barrels of oil stopped moving 3 weeks ago. Most people have no idea what that means for the money in their account. By the end of this video, you will. What if I told you that a narrow strip of water, smaller than many cities, is quietly deciding the fate of your money, your fuel, your future? And right now, that strip is beginning to shake the world economy. The Strait of Hormuz, through which nearly one-fifth of the world's oil flows, is no longer just a passage. It is a pressure point. Ships hesitate, tankers wait in silence, and somewhere beyond the horizon, tensions between Iran, the United States, and Israel are no longer distant headlines. They are becoming a global economic shockwave. Oil prices have surged not only because of what has already happened, but because of what might happen next. And in markets, expectation moves faster than reality. Fear travels quicker than facts. Think of the global economy as a living system. Oil is its blood, and the Strait of Hormuz is one of its most vital arteries. Now imagine that artery narrowing, slowing, almost closing. The system does not adapt calmly, it reacts. And so do markets. Across the world, from New York to London, from Tokyo to Mumbai, investors are stepping back, not panicking, not yet, but hesitating, watching, waiting. Because war does not just destroy what we can see, it destroys certainty. And without certainty, markets lose direction. Now consider what rising oil truly means. It is not just about fuel. It is transportation becoming expensive, food becoming expensive, electricity becoming expensive. It is inflation, returning quietly, persistently. If this conflict continues, if disruption deepens, we may not be looking at a temporary spike. We may be looking at a shift. History has shown us this before. In the 1970s, an oil crisis triggered global recession. During the Gulf War, prices surged and markets struggled to stabilize. More recently, energy once again became a central force in global conflict. But this moment feels different because this time, it is not just supply that is at risk. It is the route itself. And when the route is threatened, everything connected to it begins to move. Even traditional safe havens are behaving differently. Gold, which usually rises in times of fear, is no longer following a simple pattern because this is not a single crisis. It is layered. Inflation, policy pressure, geopolitical risk, all pulling in different directions. And then there is crypto, an asset that exists outside traditional systems. In moments like this, it behaves in two ways at once. It falls with fear, and it rises with distrust. If confidence in global systems weakens, even slightly, crypto may not just react. It may evolve into something more significant. Not stable, but independent. Now step back for a moment, because this is not just about markets. This is about the real world. A business paying more for energy, a family paying more for electricity, an economy adjusting to rising costs. From the United Kingdom to India, from Pakistan to Brazil, from Japan to Indonesia, no country remains untouched. Because in a connected world, there are no distant conflicts, only delayed consequences. And if this continues, if tensions do not ease, the effects begin to compound. Inflation rises again, interest rates remain higher, growth slows, and markets begin to feel heavier, not collapsing overnight, but drifting downward, steadily. History has always warned us about moments like this. Conflicts over energy, over trade routes, over access, have never remained isolated. They reshape systems. They shift power. They create a different world on the other side. So now we arrive at a question that matters more than ever. Is this a temporary disruption? Or is this the beginning of a deeper shift in the global economy? Because when the flow of oil is threatened, it is not just energy that is at risk. It is stability. It is momentum. It is the rhythm of the modern world itself. And when that rhythm changes, everything else follows.